Exercise 16-21. We're going to do a complete statement of cash flows. The income statement and additional data of Boost Plus Incorporated follows. So here's the income statement, and here's our additional data. Prepare the statement of cash flows for the year ended September 30th, 2024 using the indirect method, and include a separate section for non-cash investing and financing activities. Complete the statement one section at a time, beginning with the cash flows from operating activities. Use a minus sign or parentheses for amounts that result in a decrease in cash, and if a box is not used, leave it blank. So the operating activities section always starts with net income, and we get the net income from our income statement. So we got $44,000 of net income. And in case you forgot what goes where, remember we're starting with operating activities section, which is blown up right here. And of course, if you forgot why these things are added or subtracted, you go back and rewatch these videos. So next on our cheat sheet, after net income is depreciation, depletion, and amortization. Now these will be found on the income statement, and we need to back them out. And because they lower net income, we need to back them out by adding them back in. So let's see how much depreciation this company had. Here we go. Here's our depreciation. 27,000. So I'm going to copy and paste that. Next, according to our cheat sheet, we have gains and losses, and we're going to back those out. And we would find a gain or loss if it exists on the income statement. And I don't see any gains or losses on the income statement. After gains and losses, the next thing we're going to do is we're going to analyze the changes in current assets and then analyze the changes in current liabilities. Now the order that they go in doesn't really matter as long as you're putting them all in the cash flows from operating activities section. So let's look at our current assets. Now cash we don't have to worry about. It is a current asset, but it's the difference between the beginning and ending balance will go at the bottom of the statement of cash flows. So then we're going to go with AR. So it looks like AR started at 46,000 and went up to I got these years backwards. 2023, so the older years on the right. So it looks like AR went from 61,000 and it decreased to 46,000. So on the label we put decrease in AR. So what effect on cash? What is the effect on cash when AR decreases? Well, if AR decreased, then cash must have gone up because we collected on AR. So the amount is 15,000. And always double check your cheat sheet if you don't have it memorized. A decrease in a current asset, you add it. And an increase in a current asset, you subtract it. So the next one is just that, inventory. So inventory went from 88,000 to 94,000. So if inventory went up, then cash went down. So we're going to subtract the difference. And the difference is $6,000. And we call that an increase in merchandise inventory. Okay. And that looks like that's the last of the current assets. So the next part of our cheat sheet says we need to analyze the change in current liabilities. So our current liabilities, we have AP and then accrued liabilities. I'm going to start with accrued liabilities just because this one is easier to understand. So accrued liabilities went from 20,000 to 12,000. So what must have happened to cash if our debts went down? We must have paid them off. So we're going to subtract this. So that difference is minus 8,000. Decrease in accrued liabilities. And always double check your cheat sheet. A decrease in current liabilities, that means you subtract. Notice arrows are the same way for current liabilities. If they go down, then cash went down. And then in the next case, if current liabilities increase, we have to add that. And that's what's happening in the next current liability. AP went from 15 to 32, so AP increased. So in that case, an increase in current liabilities, you add it. So that difference, so what is that? A difference of 17,000? We're going to add that. We put in the comma for you. Increase in AP. And looking down here, I don't see any other current assets or current liabilities, so we're done. So we're going to take 27,000 plus 15,000 minus 6,000 minus 8,000 plus 17,000, and we get 45, 000. So we're going to take 44,000 and add 45,000, and we get positive $89,000. So what this means is, from their operating activities, which is the main part of the reason the company exists, to buy and sell services and or products, they had positive $89,000 of cash flow. That's good. And getting back to accrued liabilities, if you forgot what an accrued liability is, it's, and remember, this is a current liability, therefore it's something that's going to be paid within the next 12 months. The most common example of accrued liabilities would be salary payable. So if our salaries payable went down, then we must have paid it, therefore cash went down. So let me check my answer. Oh, I guess we already did. So now we're going on to cash flows from investing activities. So what goes in the investing activities section? Changes to long-term assets, but again, only if they involved cash. Because remember, this is the statement of cash flows. If there is a change to a long-term asset that did not involve cash, it would go into that last section, the non-cash investing and financing activities section. And here's another way to look at it. Investing cash flows happens when there's changes to long-term assets. So what we're going to do is we're going to go through here one by one and figure out if they affected the cash for the investing activities section, and then after that, the finance section. So let's look at the first one. Acquisition of plant assets. Now, plant assets are long-term assets, so they're going to go in the investing activity section if they involve cash. So we acquired some plant assets of $124,000. Of that amount, $108,000 is paid in cash, and the rest was obtained by signing a note payable. So we do have cash going down, so we're going to put a minus 108, 000 for acquisition, or cash payment, I should say. Cash payment for acquisition of plant assets. I accidentally put in a decimal. Now I'm having trouble getting rid of it. Comma. There we go. Next, cash receipt from sale of land. Land is a long-term asset, therefore it's going to go in the investing activities section. So cash that we received was $20,000. Since we received the cash, it's going to be positive. Cash receipt from sale of land. There was no gain or loss. We already know that because that would have appeared on the income statement. So let's get back to this $16,000 of a note signing a note payable. This is going to go in the fourth section, the section for non-cash investing and financing, but my accounting lab will not let us jump to that section, so we have to remember to put that in that section when we get to it. So next, remember we're working on long-term assets. So let's look to see if there's any other long-term assets that we're working with. So here's our land, and that's already been addressed with this. Our only other long-term asset is plant assets, and that has already been addressed with this. And so later they talk about issuing common stock. That goes in the financing, note payable, financing section, dividends, finance section. So we're done with the investing activity section. So we can take 108,000 and combine that with 20. So 20 minus 108,000 gives us negative, don't forget your negative, minus 88, comma, 000. So for investing activities, we have a cash outflow, in other words, negative. We're using cash to invest. Mostly it's acquiring plant assets. So we can check our answer. Next, we're going to go to the financing activity section. So let's go up here with cash receipts from issuing common stock. Oh, well, first let's go back to our cheat sheet. For section 3, the financing activity section is changes to long-term liabilities and equity. And if you look at it over here, financing is long-term liabilities and equity. So depending on which way you like to look at it, I like this method because it's visual. So we're looking for anything to do with long-term liabilities and owner's equity. And this first one, cash receipt from issuing common stock. Common stock is equity. And we receive cash, so this is a positive. How much cash did we receive? 36,000. Cash receipt from issuing common stock. Next, we paid a note payable. So we paid off a note payable. Where does it say something about, here we go, cash payment of notes payable. And since we're paying the note payable off, cash is going down. That's minus 15,000, which I got from D. Payment of dividends. So that dividends, remember, are paid out of retained earnings, and retained earnings is part of equity, therefore it goes in the financing activity section. And since we pay dividends, that's cash payment of dividends, we have to subtract that because cash went down. So looks like we've analyzed all of these. Notes payable, common stock, and retained earnings. So we're done with the financing section. So we can take 36,000, subtract 15,000, subtract 5,000, and we get positive 16, 000. Check our answer. Well done. Next, we've got net increase and decrease of cash. So we should double check this two ways. The easiest way is look at our cash here. Cash went from 13,000 up to 30,000. So we have a increase of cash of 17,000. But you should double check your work. We're going to take 89,000. We're going to add the three sections. So 89,000 minus 88,000 plus 16,000 gives us 17,000. Then next they ask us what was last year's cash balance. Copy and paste, 13,000. What is this year's ending cash balance? 30,000. And then we've got the non-cash investing and financing section. We have one item that goes in there. Hopefully you remembered this. We had the $16,000 by signing a note payable, and we acquired land. Or excuse me, we acquired plant assets by signing a note payable, 16,000. So leave this as a positive because cash is neither going up nor down, And we're going to say acquisition of plant assets by issuing a note payable. And then the balance is the same as this. And that's it. That's how you do a complete statement of cash flows.